Welcome to the Deep Dives. Today, we're jumping into the incredibly fast-moving world of semiconductors. It's relentless.
It really is nonstop innovation.
And right at the heart of it, especially with AI, is advanced micro devices,
Right.
AMD.
AMD, big player.
So we've spent time digging through a ton of articles, research reports, market data, you name it.
A big stack.
And our goal here is to pull out the key insights, the surprising bits, and really help you understand what matters about AMD right now.
Cutting through the noise, essentially.
Exactly, making sense of this dynamic landscape. So let's start with a quick snapshot. AMD's first quarter in 2025 looked, well, pretty impressive on the surface.
And very strong numbers, yeah.
Revenue was up 36% compared to last year, hitting $7.4 billion.
That's a solid jump.
And the big drivers. Data center revenue surged 57% year over year. That's mostly their EPYC CPUs and those Instinct GPUs we hear so much about.
Right, the AI chips.
And client revenue, think of laptops, desktops, that was up a massive 68% thanks to the new Zen 5 Ryzen processors.
So it really looks like their big bet on AI is starting to pay off.
It does. But like you said, that's the surface view.
Right, because for you listening, it's really important to understand the other side of the coin. While that growth is impressive, AMD is facing some serious headwinds.
Headwinds like?
Primarily, the U.S. export controls on AI chips going to China. That's a big one.
Big.
Well, projections show it could slash about $1.5 billion from their total revenue for fiscal year 2025.
Wow, okay. $1.5 billion.
And it hits harder in the short term, too. Q2 2025 specifically, they're expecting an $800 million charge against gross margins.
$800 million.
Yeah.
Just for inventory related to those controls.
Exactly. It shows how significant those China sales were, especially for high-margin AI products.
Okay, so that's a major challenge. High stakes indeed. So how is AMD juggling this? Growing fast, but also facing these huge hits.
It really comes down to their core strategy, their innovation engine, and a key part of that is their business model.
The fabless model, right?
Exactly. They design the chips, they own the intellectual property, the architecture, but they don't actually build the factories, the fabs.
They leave that to companies like TSMC.
Precisely. Like TSMC. This lets AMD focus all their energy and, importantly, their capital on R&D on designing better chips.
Which helps them compete on price and performance without those huge factory costs.
Right. That gives them flexibility and allows that intense focus on innovation.
Okay, so let's talk about the innovation. The Zen CPU architecture, you called it the brains of the operation earlier. Why is Zen 5 such a big deal?
Well, Zen is fundamental. It powers everything from basic laptops with Ryzen up to massive data centers with EPYC.
And Zen 5 is the latest and greatest.
It is. And what's really interesting about Zen 5 is how they've segmented it. There are actually two main versions.
Okay.
There's the standard Zen 5 built on a 4-nanometer process. It can go up to 128 cores, and it's really optimized for raw per-core speed, hitting up to 4.1 gigahertz.
Fast.
Then there's Zen 5C. This one uses an even more advanced 3-nanometer process.
Smaller transistors, more efficient.
Right. It's tailored for high-density EPYC server chips, like the 9965 model, which packs up to 192 cores. The focus there is power efficiency and core count.
So different tools for different jobs.
Exactly. But both are designed for double-digit increases in what's called IPC instructions per clock cycle. Basically, they do more work with every tick of the processor clock.
Which is crucial for efficiency, especially with demanding AI tasks.
Absolutely crucial. And you saw the impact that strong demand for Zen 5 Ryzen chips drove that 68% client revenue growth in Q1.
Makes sense. So Zen covers the compute brain. But what about the graphics and increasingly the AI muscle? That's the RDNA architecture for GPUs.
That's right. RDNA is the foundation for their Radeon RX graphics cards, the ones gamers use.
Like the RX 7000 series.
Yes, the 7000 series uses RDNA 3, which brought in improvements like infinity cache and redesigned compute units.
And looking forward, what's next after RDNA 3?
Well, the projections for the next generation could be RDNA 5, some are calling it UDNA, are pretty exciting. The aim is to roughly double performance in ray tracing.
That's the realistic lighting effect in games.
Exactly. And also double performance in AI functions, plus maybe a 20% boost in traditional rasterization performance.
So they're really trying to close that gap with NVIDIA, especially at the high end.
Directly targeting it, yeah.
And they've been launching new products, too.
Yeah.
Back in May, right? At Computex.
Yeah, they launched the Radeon RX 9060 XT. That one's aimed squarely at 1440p gaming.
A popular resolution. What were the price points?
Aggressive. $299 for the 8 GB version, $349 for 16 GB.
Trying to grab market share there.
And they also launched something for workstations.
Yes, the Radeon AI PRO R9700. That's for AI development on workstations, and significantly, it has full support for their ROCm software.
Okay, hold that thought on ROCm for a second, because here's where things get really interesting, maybe a bit concerning for AMD.
That urgency with these new gaming GPUs, it seems underlined by a pretty dramatic drop in their discrete GPU market share.
Ah, yes. The Q1 numbers.
Down to a historic low of just 8%. That really shows NVIDIA's dominance right now, and maybe some issues AMD had with product availability.
It does paint a stark picture in the consumer GPU space, which makes their focus on the data center AI side with their Instinct accelerators even more critical.
Right. The MI300, MI350. These are the big guns for AI and HPC.
Absolutely. The MI350 series, for example, is showing something like a 4x increase in AI compute power compared to the previous generation.
4 times. That's huge.
And get this 35x generational leap in inferencing performance. That's how quickly it can use a trained AI model.
Okay, 35x is staggering.
It really is. Plus, it's packed with memory, 288 gigabytes of that super fast HBM3E memory.
High bandwidth memory.
Yeah.
Feed the beast.
Exactly. And massive bandwidth, 8 terabytes per second. Think of it as an incredibly wide, fast data highway right to the chip. No bottlenecks.
And they have an MI400 plan, too.
Yeah, that's slated for the second half of 2026. Even more powerful.
So the hardware is clearly there. Serious hardware. But you mentioned ROCm earlier. Hardware is only part of the AI puzzle, right? Software is key.
Absolutely essential. And that's where AMD ROCm comes in. It's their open software stack.
Open being the key word there.
Very much so. It's a whole suite of tools for AI and high-performance computing development. It supports the major frameworks developers use, like TensorFlow and PyTorch.
And being open means it's not locked down like, say, NVIDIA's CEA.
Exactly. The goal is to lower the barrier for developers, make it easier to use AMD hardware, and avoid vendor lock-in. It's a direct contrast to CUEA's proprietary nature.
And is it gaining traction? You mentioned it with that workstation card.
It's crucial. Big deals like that huge $10 billion collaboration with Herein in Saudi Arabia rely heavily on ROCm. Ultimately, the success of AMD's Instinct hardware is intrinsically linked to how widely ROCm gets adopted.
Especially for inferencing, you said.
Particularly for inferencing, yes. Because that's where cost efficiency and flexibility of the things an open platform offers really matter to customers. It's AMD's big strategic bet, the open ecosystem.
Okay, so this mix of powerful hardware, the open software bet, the CPU strength, but also the GPU market share dip and those export controls. How does this all shake out financially? Let's talk numbers.
Right, let's dive into the Q1 2025 results again. Overall revenue, $7.4 billion, up 36%.
We covered the data center surge, 57% up, and client up 68%. But gaming was down 30%.
Yeah, gaming dropped to $647 million, and embedded systems were also slightly down 3% to $823 million.
So it really shows AI and the data center are carrying the load, offsetting declines elsewhere. Is that a risk, being so reliant on AI right now?
It's definitely a strategic focus, and you see why when you factor in those export controls again. Remember that $800 million charge in Q2?
Yeah.
That brings their projected gross margin down to 43%. Without that charge, it would be around 54%.
So those AI chips they can't sell to China were very profitable.
It's extremely profitable, high-margin products. It really highlights their immediate financial vulnerability to these geopolitical shifts.
Despite that, their balance sheet looked pretty solid as of March 31st, didn't it?
Generally, yes. Total assets over $71 billion, total equity around $58 billion, and a decent cash position, just over $6 billion.
Liquidity looked okay, too. Quick ratio 1.77, current ratio 2.8.
Those are healthy ratios, yeah. Shows they can cover short-term obligations. Their overall debt to equity is low, too, just 0.08.
Very low.
But it is worth noting their total debt did tick up between December 2024 and March 2025. Went from about $2.2 billion to $4.7 billion.
Yeah, any idea why?
Could be funding growth initiatives. They recently acquired a company called ZT Systems, which helps with building out AI data center racks. So likely strategic investments.
And they're generating cash.
Oh, yeah. Strong cash flow. Over $3.4 billion from operations and nearly $5 billion in free cash flow over the last 12 months.
Which supports things like share buybacks.
Exactly. They just approved a new $10 billion share repurchase program that usually signals management confidence.
Okay, so the financials are complex, strong core, but definite pressure points. What about the stock itself? It's been a roller coaster, hasn't it?
Absolutely. Wild ride. It was over $200 back in May 2024, then dipped below $80 in April this year.
Wow, big swing.
Before bouncing back into the 130s more recently, closed around $136 on June 23rd. The 52-week range tells the story, $76 to $187.
That's volatility.
And the numbers back it up. It has a beta coefficient of 2.13.
Meaning, for listeners, what does beta tell us?
It means the stock is more than twice as volatile as the overall market. If the market moves 1%, AMD tends to move about 2.13%. High risk, potentially high reward.
Typical for this sector, maybe.
Very characteristic of the AI-driven semiconductor space right now. And while AMD's gain since late 2022 is impressive, around 65%, it pales next to NVIDIA's, like 739% surge in the same time frame.
Right. NVIDIA's been stratospheric. Any technical signals worth mentioning?
Well, the moving averages mostly point to buy, suggesting an upward trend. But the oscillators, which measure momentum, are mixed. Some show overbought conditions.
Meaning it might be due for a short-term pullback.
Potentially, yes. Suggests caution in the very near term.
But what are the analysts saying? They seem pretty bullish overall.
Overwhelmingly positive, actually. Lots of strong buy or buy ratings. The average price target is somewhere in the low 130s, but the median is higher, around $145, and some analysts see it going as high as $210.
So they're looking past the short-term headwinds.
Seems like it. They're focused on the long-term AI growth story, which makes the institutional holdings picture interesting.
Okay, what are the big funds doing?
Institutions hold about 64% of the shares, but in Q1, activity was mixed. Slightly more funds decreased their positions than increased them. Sort of portfolio rebalancing act.
Any notable moves?
Yeah, some big names reduced their stakes, like Fisher Asset Management, Jennison Associates. Bailey Gifford actually sold out completely.
But others bought in.
Right. Significant new or increased positions from firms like Infinitum, Marshall Wace, Jane Street. So a bit of divergence there among the big players.
What about insiders? Executives?
Over the last year, there's been a net selling trend from executives. More than 1 million shares sold. The CTO, Mark Papermaster, has been a consistent seller.
Okay.
However, the chief commercial officer, Philip Guido, has actually been buying shares recently.
So mixed signals from the inside, too.
Exactly. And just as a fascinating side note, there's been some tracking of congressional trading activity. Apparently more purchases than sales there, with Representative Marjorie Taylor Greene logging 9 purchases.
Interesting detail. So for you, our listener, it's not a simple picture from analysts, institutions, or insiders. Different viewpoints.
Definitely a lot to weigh up.
Okay, let's zoom out again. Put AMD in the bigger picture.
Yeah.
The whole semiconductor industry is booming, right?
Record sales projected for 2025, almost $700 billion. And on track for $1 trillion by 2030.
Wow. And AI chips are the main driver.
Predominantly, yes. Generative AI chips alone could be over $150 billion in sales in 2025.
But there's also this push for onshoring, bringing manufacturing back.
Yes, driven by geopolitics. Countries want more resilient supply chains. It's leading to investment in new fabs locally.
Good for security, maybe, but challenging.
Definitely creates talent challenges. Finding enough skilled workers for these advanced fabs isn't easy. And, despite the current boom, we have to remember this industry is cyclical.
Meaning the boom might not last forever.
Right. The outlook for 2026 is already looking a bit less certain than 2025, even with all the AI excitement.
Okay, now within that industry, let's look at the competition. CPUs first. How's AMD doing against Intel?
They're making serious inroads. Overall, by 86 market shares, almost 25% for AMD now.
And in servers. That's the really profitable part.
That's where they're really shining. In Q1 2025, AMD actually brought in more revenue from server CPUs than Intel did.
More revenue than Intel. That's huge.
It is, and projections suggest they could hit 38-39% market share by the end of this year. There are reports they even have 50% share at 2 major U.S. cloud providers.
Believed to be Microsoft Azure and Google Cloud.
That's the speculation, yes.
Yeah.
Significant wins.
But the GPU side, as we discussed, is tougher. NVIDIA still dominates AI.
Overwhelmingly dominant in AI training, yes. Around 90% of the revenue there, and we saw AMD's discrete gaming GPU share drop to 8%.
But you mentioned AMD's strategy might be different, focusing on inference.
Exactly. Their MI300 and MI350 GPUs are gaining traction for AI inferencing. That's running the trained models. Why? Because they offer good performance at potentially a better cost and scale well.
So carving out a niche.
A potentially very large and profitable niche. Instinct GPU revenue is projected to grow to maybe $7 to $9 billion this year. It looks like a strategic split in the AI market. NVIDIA leads training, AMD makes a strong play for inference.
It's not about beating NVIDIA everywhere, but winning where it counts for their strategy.
Precisely. A smart pivot.
And all this happens against that backdrop of geopolitics, the export controls. You mentioned AMD is trying to mitigate that.
Yeah, they're trying to push adoption of the newer MI350 chips faster, potentially in markets outside China, and generally diversifying sales geographically to allied countries.
It just shows how tangled tech and politics are now.
Absolutely. It's a persistent risk factor that you, as someone following this space, just have to account for now. It's part of the landscape.
So connecting this back to their long-term vision, they've been busy with partnerships and launches, haven't they? We mentioned Computex in May.
Right. New gaming cards, the Workstation AI card, but also new CPUs. The Ryzen Threadripper 9000 series for high-end desktops and workstations.
Claiming big performance gains over Intel Xeon.
Up to 145% faster in some tasks, according to AMD. And importantly, they launched new processors for the AI PC market.
Laptops with dedicated AI capability.
Exactly. The Ryzen AI PRO 300 series, offering over 50 TOPS of NPU performance.
TOPS being tera operations per second, a measure of AI crunching power on the device itself.
Right, making laptops smarter and faster for local AI tasks.
And beyond products, there are those big partnerships. That Humane deal in Saudi Arabia sounds massive.
It's landmark. A $10 billion collaboration to build AI infrastructure using AMD tech. We're talking up to 500 megawatts of AI compute power deployed over 5 years.
Huge scale.
Initial deployments are already happening. They expect multi-exaflop capacity by early 2026. It's a massive commitment to AMD's platform.
And other partnerships too.
Yeah, an alliance with HCL Tech in India for AI and cloud solutions. And ongoing work to make sure their ROCm software supports the latest big AI models, like Meta's Llama 4 and Google's Gemma 3.
So these aren't just sales, they're about building out that whole AMD ecosystem.
Exactly, they're co-investments, really. Diversifying where the revenue comes from and locking in future demand, especially for that open ROCm approach.
Okay, let's try and wrap this all up. Pull together the key takeaways from this deep dive.
All right, AMD is clearly a major force, especially in AI and high-performance computing. Q1 results showed strength. The product roadmap with Zen 5 and Instinct looks aggressive.
And that open ROCm software ecosystem, plus those big partnerships, seem absolutely central to their growth plan.
But, and it's a big but, the challenges are real. Intense competition, particularly from NVIDIA and GPUs, is undeniable.
And those U.S. export controls are having a real, measurable financial impact, especially on sales to China.
Right. So while analysts are optimistic overall, we see mixed signals from institutional investors, and the stock itself is, well, very volatile.
So the long-term outlook seems bright, tied to the whole AI megatrend. But expect bumps in the road short-term.
Definitely anticipate continued volatility. Market cycles, geopolitics, fierce competition, they all play a part.
So for you, our listener, what should you keep an eye on?
Well, given the volatility, if you're looking at AMD, a patient long-term view seems essential. Don't expect smooth sailing day to day.
Then watch their execution.
Absolutely. Keep a close eye on how well they deliver on that AI roadmap. Are the MI350 and MI400 GPUs ramping up as expected? Is ROCm gaining adoption? Are they continuing to gain server CPU share?
Also track how they manage those geopolitical risks. How are they mitigating the export control impact?
And watch the competition. How do NVIDIA and Intel respond to AMD's moves?
And finally, keep checking their financial health, balance sheet, debt, cash flow. Make sure they're using their capital wisely.
All crucial points.
Okay, let's end with a final thought for you to mull over.
Here's something to consider. AMD is really pushing this open software ecosystem with ROCm as a direct challenge to NVIDIA's closed proprietary CADA system, which has dominated for so long.
Right, the open versus closed battle.
So the provocative question is, if AMD actually succeeds with this open approach, how could that fundamentally reshape the entire AI hardware industry? Could it make AI development more accessible, more competitive? And what might that mean for innovation and progress overall, going beyond just market share for AMD itself?
An open future for AI hardware. Definitely something to think about.